Welcome back in. The main concern with coronavirus is obviously with those who are dying from it and getting very sick, but it is having a ripple effect on the economy, including your money as well. Wall Street took that huge hit on Monday. Now this morning we're on your side with the best strategies to protect your money, and joining us with analysis and perspective is Stewart Welch, our financial expert with the Welch Group. Good to see you this morning.
Hey, Mike.
Monday was a tough day, and this seemed to be sparked by the World Health Organization saying that they had some concerns that right now this virus is not being contained in other countries outside of China. So talk about why this is negatively impacting the economy across the world.
So China, in 2000, China was a much smaller player. Today they are a much bigger player in the world economy. So most countries are big trading partners with China. I've got a friend who has a plant in Wuhan, and those people have not been working for going on now 4 weeks. So they're not moving any of his furniture, they're not moving any of it. And so you can imagine it's a supply chain problem, and that's not just his plant, that's kind of all over.
Yeah, you're talking about Apple,
yeah,
tons of Fortune 500 companies, parts, yep.
You know, it's a lot of small parts, and you have the big stuff here, the small stuff there, and supply chain is a big deal. So it's going to cause a kink in that supply chain, and that will have a ripple effect in the economy. Now, how long this goes on and how big it gets is, right now, we just don't know.
Anybody's guess. Your clients, are they really concerned? Should investors be concerned right now?
Well, we've gotten a call from our clients saying, you guys are doing a great job.
Well, so good. Right.
We're okay.
Okay.
But I do think that investors are obviously nervous. You had a big pullback yesterday, 3.5%. It's a really big one-day drop in the market. I do think that it's potentially what I'd call a gray swan event, you know, not a black swan event.
So let's talk about strategies now. What you should, depending on your age, what should you do to keep your money safe right now?
Well, I think the first thing is everyone needs to be sure that they have money in reserve. So that might be 3 months, 6 months, 12 months in reserves. That's for everybody. And then you have what I call accumulators, and this would be early and mid-stage accumulators. They have a long time, so they should just continue to dollar cost average into the market, and they may be able to buy stocks at a much lower price.
So explain that. If you got a 401k, it's got some stock investment in that 401k plan or mutual fund, stay there because you're buying more stocks at a lower price, right?
And you're buying it every paycheck you're buying, so you want to just keep dollar cost averaging into that. If you're nearing retirement, that's kind of a late stage accumulator, I think now you want to begin to accumulate money in more risk-free investments. So that ultimately you want to get somewhere between 5 and 10 years. Okay. By the time you hit retirement, you want to be at, I would say, a minimum of 10 years. Okay. So that's really how we focus on.
So we're talking about money market funds, even CDs maybe?
CDs, it could be low risk, relatively short-term bond funds or bonds.
All right. Stewart Welch with some good information this morning. Thank you, sir.
Thank you, Mike.
Appreciate that. It's 7:45.